this basically is confirming here is that inflation doesn't seem to be transitory. And I'm trying to interpret this and find how to monetize out of this information here, that we continue to get indications that inflation is rising. U.S. consumer prices rose last month at the fastest annual pace in nearly 40 years, magnifying how rapid and persistent inflation is eroding paychecks and increasing pressure on the Federal Reserve to tighten policy. The Consumer Price Index increased 6.8% from November 2020, according to Labor Department data released Friday. The widely followed inflation gauge rose 0.8% from October, exceeding forecasts. Let's take a look at Bitcoin right now. At the opening of the market at 5:30, basically, or the report came out, the market rallied from the buy one level of 49,177 and met the target of 50,273. Pretty much completed this pattern, and now we've entered it back into and below the buy one daily level and the buy two daily level. That indicates the market is in an area of support, an accumulation of supply, where the algorithm is telling you this is an area where you want to accumulate supply all the way down to 47,518, particularly if we close above 49,177 once again. I must tell you that with inflation being up the highest since 1982, I'm dumbfounded why the gold market is not limit up. In 1981, gold traded as high as $850 an ounce, and interest rates were at 15%. Roughly in that neighborhood. And I am intrigued, puzzled by the fact that precious metals have not reflected this inflationary pressure that we're in. The stock market continues to make new highs, which is completely the opposite, you might say, of what should be happening here. But if we take a look at the E-mini S&P here, it's activated a short trigger on a weekly basis by trading below this signal weekly, the weekly signal of 4679, 4687 for the mini S&P. And it's reverting right from that weekly level that is indicating a close below is activates a short trigger. So do go short, you can use the stop above 46.87 to cover your position. Take a short trade, and we're going to use a close above 46.87 to stop out. My target is 46.32. This is a day trade for the mini S&P. We are short at 46.80.75. Use maximum dollar stop based on your profile. And the target is 46.32 for the day. Bitcoin, if we trade about 49,177, it's activating a buy trigger. This area is accumulation of supply using the variable changing price momentum indicator. One of the markets that seem to be very, very hot, you might say, or explosive here is grains. We are breaking out in soy meal. It looks like we've established a bottom here on November the 30th, and we pretty much have reignited the bullish uptrend here, and it looks like we are about to break out. We break out above the previous high of 372. It looks like we have a Fibonacci extension golden ratio of 161.8%, target of 408. It's a pretty big move. The consumer price index at 6.8%, the highest since 1982, I believe is indicating for us that inflation is not going to be transitory. This is falling into the other areas, you might say, affecting some of the other areas like grains. And I'm focusing on the soy meal, soybeans, corn, as I believe we're going to see a phenomenal move. as we move into the springtime. The spreads on grains are inverted, which means that the prices for the near months are higher than the back months, and that essentially is represent that the market is expecting a shortage in corn, wheat, particularly in corn and soybeans. And this is what the market basically is telling us. I'm taking a look at bar chart here using Heikiashi charts, and we're looking at a breakout, as you can see, for soy meal. Soybeans, it's part of the soybean complex, it's part of the soybean crush. When they crush the soybeans, they produce soybean meal, which is for human consumption, animal consumption, and they also produce soybean oil for industrial production and for human consumption. These are terrific markets to trade during an inflationary move like we seem to be building up pretty much across the economy. But I am completely puzzled by the fact that the gold market has not reacted yet. And I'm not saying that it's not going to, but there seems to be some kind of a blocking element in suppressing the prices to adjust to its current condition. When you take a look at everything out there is adjusting to this inflation level. The only ones that are not so far have yet adjusted are gold and silver and precious metals. And needless to say, I believe for like most bulls in this market here, I'm completely puzzled. And trying to identify what it is that seems to be the obstacle, whether it's political, whether it's economic, in terms of what is holding the price of precious metals, gold mining shares literally to explode. Now, we are going through a monetary change, obviously, as we move into this highly indebted world economy. We're running debt to GDP ratios at 130%, and we have negative interest rates, particularly when you take a look at the 10-year note. 10-year note is trading at about 150. It's pretty much not reflecting. 146.5 down two ticks, and it's not reflecting at all this CPI inflationary numbers that came out. The stock market is up. And so this is unlike anything that was expected during this economic numbers. Gold should be moving higher. I'm not saying it's not going to, but it should be moving much higher than it is. But so far it's again being held back by some kind of a block that's taken place, not allowing the price to reach its mean, its real value. Let me come back here to silver, and we seem to be activating a buy trigger in silver. We're going to be buying a silver at the market here. We're going to be buying a silver at the market here. For those that are following me and in my trading room, guys, buy a silver at the market. It's activating a day trigger, buy trigger from buy one, 21.87. We're long at 22.13. May be a blessing in disguise that it's still down here enough to allow me to pick up some silver futures. If you enter into the trade, you have a few choices basically to use as a stop. The first one, the most conservative one, is a close below 21.87. The second one is a maximum dollar stop according to your profile. And the third one basically is a close below by 2. You can also use this level below here between 21.87 and 20.87 to add to your position. This is once again area to accumulate supply. We took a nice profit here on the micro Bitcoin early this morning of $4,310 on a quick day trade right after the opening of the market, or the announcement, I would say, at 5:30 regarding the CPI, which was much, much higher than expected. We are holding a long futures contract in gold. held it a little bit too long here, as it rallied all the way up to about 1790. The target was 1785. So we've made a nice piece of change here, and I recommend to take profits as well on your gold book profits. $540 on gold. Continue to hold your long-term core position long, and be patient, because I do believe that the adjustment will come, and when it does, I believe it's going to be a pretty violent adjustment taking place. Don't despair, be patient, and if you can, add to your position. The gold market, the precious metals markets will never be replaced. Once the market realizes the flexibility of basically having your cash, fiat currency, and precious metals, without the complications of the digital world, you might say, which is still in developing stages. It's still running a lot of risk. It's still very volatile as it moves into a more accepted form of an asset that can be considered a store of value. But when you're getting a 40% correction in fluctuation in that asset, I don't believe that it is yet a store of value yet, or at least it cannot compare itself to gold and silver, which have been traditionally been a store of value, purchasing power for thousands and thousands of years. This adjustment will take place, and again, when it does, it's going to be pretty brutal. So I continue to tell you that be thankful that the prices are still at these levels here. I don't believe they're going to be down here much longer. And as long as I've been trading in these markets here in gold and silver, the markets have a unique personality, different than anything else that possibly you can identify with. And it is trading on its own internal technical seasonals, regardless of the fundamentals. And I think the time is coming where you're going to get this premium built into precious metals that will reflect, I believe, the risk that the economy is building, which seems to be inflationary. The economy is acting irrational. wise at times to manage your risk prudently and not overtrade, not over leverage yourself, but do continue to hold on to your core position, as I believe once again this adjustment will take place relatively fast and in a violent manner. We have a 2-week trial here for those that are interested in joining us here in the Discord live trading room for the rest of the day. We trade 30 minutes live, but we do trade live throughout the rest of the trading day. Join us. I think you'll be pretty amazed to see what happens here during the trading day sometimes. So I